I need you more than anyone, darling.
Are you live?
Yeah.
Sing
I got 5 minutes to kill before I need to start speaking. But I'm on the radio ahead of time so people can get in there, get ready. I need you. So build me up, buttercup, don't break my heart. Everything is okay. Just when you thought the market might break down, it's right back up. Seems to happen on every time frame.
Derrick, you think it's a bother if I go to call or check it outside?
I'll probably go in a conference room if you can. Do you have access to that other room over there?
Yeah, I do.
So build me a buttercup, don't break my heart. Alright, it's noon. Wait about 30 more seconds here before I start. Let some people get in. This market, man, just cannot go down. All right, let's get the show on the road. So it is time for your weekly prop trader market update, hosted by myself, Derrick Oldensmith. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I got less positions than I usually do. I cut back on some things. I tightened some things up right before the market had its little breakdown into the end of last week, into the options X situation. Of course, we once again, I'll talk about this with some charts here in a second, we once again gave a 100% retracement in a very short period of time, which is really impressive. So a couple of these positions I actually initiated today, like my long in X and my short in TQQQ. I actually initiated that yesterday into the close, very small, and added to that a little bit just a little while ago. So let's talk about all that. About me, you know, I am a senior trader and registered principal at T3 Trading Group. I've been here for 11 years. I've mentored well over 100 professional traders at the company. I'm currently managing a group that's in excess of 100 traders. Big into martial arts, big into skiing, former professional kickboxer, retired from that sport a few years ago. Actually been getting back in the gym a lot, doing a lot of martial arts, sparring lately, which has been pretty cool. Trying to get back in shape, but definitely starting to feel my age a little bit. Got some aches and pains. I'm going to be talking about markets today. I'm going to be talking about T3. I'm going to be talking about how you can become a professional trader with us. If any of this interests you, or you just want to have a chat, here's my email address, doldensmith@t3trading.com. First initial, last name at t3trading.com. It'll pop up again at the end. So let's go to the charts. Let's talk about this market. All right, so here's a little 5-minute chart of the SPYs, S&P 100, going back yesterday into today. Let's look at the daily chart here. So very clearly, and I'm just scrolling back here to the beginning of 2021, I mean, this is a very clear uptrend, right? It's a definition of an uptrend. It's a pattern of higher highs and higher lows. The interesting thing here is the last 4 months in a row or so, we've had sell-offs into OPEX. So we had operations. We had options expiration on Friday of last week, and you can see here that we had 2 down days followed by a really big gap down. This is actually Friday, right? No, this is Thursday, excuse me. And then from that point, we rallied and continued that rally yesterday. So it's been a pretty impressive move. July, very similar. We had like 4 down days in a row going into options expiration, and then immediately V-bottomed, made a higher low, and got right back to highs. June, same exact thing. Few day sell-off, it's only dip of the entire month. Get a little bit extended to the downside. V-bottom, higher low, big picture for the market. Within 3-4 trading sessions, right back to highs. May had a little more volatility, but we basically saw the exact same thing. So this has been a really strong market. It has not been a volatile market. We haven't even had a 5% pullback in the S&P. I don't think we've had one the entire year. We've had it in the NASDAQ. We've definitely had it in the Russell, but I don't think we've had it in the S&P all year, not even 5%. It's a little bit of a statistical anomaly, though it's not the first time it's happened. And these little pullbacks have all been in front of options expiration. I actually, going into that, before we pulled back, or maybe as we started to pull back on this day, I actually used this as an opportunity to clean up my portfolio a little bit. I tightened up some things. I got out of Amazon, I got out of Apple, I got out of SXC, which was an energy oil play that I was in for a little bit. All I'm pretty sure for profit. So just gave. I like to implement a trailing stop system on my swing positions in order to maximize my reward. When I'm with the trend. Like if you look at the S&P right now, that's trending higher. In theory, reward is unlimited, right? In theory, reward is unlimited. Because unlike when you're short, the maximum reward is if the stock goes bankrupt and it goes zero. In theory, when you're long, especially when you're with the trend, there's no resistance levels in sight. We're at all-time highs right now. Then the market could just, in theory, continue forever. And that's kind of what's happened here for the market and for a lot of the stocks that are out there. So it's been pretty impressive. I use this pullback as an opportunity to clean up some stocks, also to get, honestly, a little heavier in this pullback on some other positions. And then it was on, I guess, Thursday of last week when we gapped down and we were a little bit extended to the downside. We talked about starting with some lighter buying off the open that day, and it worked out really well. I wasn't prepared to get really heavy yet at that point because I didn't think we were extended enough to the downside. The way that I measure extension is where the market is trading versus the space between the 8 and 21 EMA. So if you look at just this pullback on this gap down, the S&P low here, which is also about the opening price, is about 436, and your 21 EMA is at 440. So we would say that you're extended to the downside by about $4 or so, a little over $4 from the 21 EMA, and then more like $6 from the 80 EMA. So there was some decent downside extension to this gap down. We came in, we took advantage of it. We recognized a gap down in a bull market into the 50-day simple moving average, which I don't have on this chart, but each one of these pullbacks has been basically finding some support around that 50-day. To take a half step back, I don't believe that moving averages are actually support and resistance, but they are tools, right? And we utilize those tools to understand things like market trend, or in the case of the 8 and 21 EMA, to understand equilibrium. So the market trend is represented by the slope of those simple moving averages. So the slope of that 50-day is pointing up, and this can also act as a little bit of a self-fulfilling prophecy. So when the market gap down into the 50 SMA, and it's a little bit extended in there, and that's kind of where it's continued to hold, we viewed that as at least a short-term buying opportunity. Obviously, it's been a big bounce off that. I did not expect that we would bounce this hard, this fast. Obviously, we are in an uptrend, so what I tell my team on a day-to-day basis is, since we are trending higher, we want to continue to err to the side of the longs. I'm definitely going to be talking about BAVA today because that was the trade of the day for the team. So we want to continue to err to the side of the longs for this market. So that's kind of where the S&P is. Really impressive. At this point, after 3 big up days in a row, we're actually a bit extended to the upside, particularly in the NASDAQ. We're a bit extended to the upside. It's actually the 4th day up. And the Qs right now are trading, again, this is how I utilize these moving averages. The space between the 8 and 21 EMA is the space I consider to be equilibrium for any stock or market that I'm looking at. So right now, if the Qs are trading at 347.50 and that 80 EMA is at about 369.22, then we can say that the Qs are extended to the upside by a little over $4. And that doesn't even include the fact that we actually came from 360 just a few trading sessions ago to 374, cleared right through those moving averages. We went from oversold to overbought in 3 days. It's really impressive. Granted, I would not describe this level of oversold or this level of overbought as being particularly dramatic. It's overbought and oversold nonetheless, especially considering that it's August, it's the end of August, where markets typically slow down. So obviously NASDAQ is really bullish, SPYs are really bullish. I shorted a small amount of the TQQQ, which is the leveraged NASDAQ, into yesterday's close that I kept overnight. I added a little bit of that today as a little bit of a trade, a little bit of a hedge as well, because everything I'm in is long and it's been a really strong bounce over the course of 3 days. But if we break the pre-market high in the TQQQ, that my plan is then to exit that position. I am not going to be one of these guys, and I've been this guy in the past, so that's how I'm able to say it. I'm not going to be one of these guys who is just, oh, I want to put this short on in the SPYs or the Qs so that I'm hedged, and then all you do is just bleed out and bleed out and bleed out and bleed out in your SPY and Q short. As a matter of fact, one of the biggest pain trades that's out there for, I think, hedge funds right now and institutional folks is people who are long a lot of these stocks that are basically in bear markets. You know, really for the most part, the speculative type of names. Some of them are really beaten up, like a Wish or SoFi, which I'm actually long SoFi right now into this bounce. But you know, this thing very clearly is in a bear market. Even some of the ones that have performed a little bit better, like a Triple D, is still, you know, well off of its June highs of 42. That FSR that caught that upgrade that then completely wrecked this thing down. Some of these caught bids a couple days ago, like B-Fly caught a really strong bid yesterday into today. So some of these speculative names have given a big bounce back. But the biggest pain trade that's been out there right now, as great as a bounce back in this B-Fly has been, is if you're long any of these types of stocks, Jumai here, a little bit of a bounce, these things are in bear markets literally just from the June highs. So like the ultimate pain trade out there right now is, oh, I'm short the SPYs and the Q as a hedge, and I'm long Jumai and B-Fly and, you know, the 3D printing names and the garbage-looking marijuana stocks that, again, these stocks have given a little bit of a bounce over the course of 3 days, but just look at the chart. I think you guys get the point here that that's been just a big pain trade, and I know that that's one that funds are involved in right now, or they're just taking it on both sides. So for me, if I do put a hedge on, if you even want to call it that, it's also a trade at the same time. So I got no problem getting myself stopped out. I have no interest in fighting a really strong bull market, just short a little TQQQ yesterday into today, given the strength. And I mean, given the extension. So one of the things I really want to chat about, it's worth talking about, is the Chinese names. These Chinese names, this Alibaba was a month maker for a lot of the people on the team yesterday, or definitely some of the people on the team. Really good trade for me as well. I think anyone who knows me is part of my Pro Desk virtual trading floor, or even if you follow the Tuesday webinars that I do regularly, you probably know that I'm actually a big China bull. And the reasons for it are of a qualitative, fundamental nature. They've got the largest population, they have the largest middle class that is consistently growing and becoming wealthier and becoming more consumer orientated. All that to me just screams bullishness for some of these e-commerce stocks like Alibaba and JD. Now, these things have taken huge hits, starting with Alibaba, you know, putting in a high of about $320 back here in October, and then yesterday this thing traded as low as 153 bucks. So, you know, over a 50% haircut in under a year on Alibaba that puts these types of companies at an extremely cheap valuation compared to their US counterparts. Now, you can definitely make the argument that some of that cheapness, if you will, is justified because there are exogenous risks that come out of the Chinese government and come out of the regulation that comes from the Chinese government. And I agree with that 1000%. As a matter of fact, we just saw it, right? It started with the Jack Ma and the Ant Financial situation, and then eventually it bled over into the DD fiasco with the DD IPO, and it just led to new regulation. However, at the end of the day, the Chinese government is still incentivized to see these companies succeed. And they still have more or less a monopoly on this massive middle class. And one of my favorite statistics, Alibaba has more users than the United States has population. Just think about that for a second. It's insane. Now, that's great and all. I can have this thesis on why I think you should be long Alibaba, and I've got it long in like my personal account, which is really just like a buy and hold, dollar cost averaging type of thing where I'm not actively trading. But from like an actual trading perspective, especially if you're trading with leverage, you can't be long this down move. You cannot be long this down move. This down move has been a disaster for the stock, and it's been a disaster for anyone who is on a leveraged account who is like, you know, trying to hold this thing long into this down move. So one of my favorite sayings in trading, and this is not my saying originally, it's a stolen saying. I stole it from one of the podcasts I like to listen to is Masters in Business with Barry Ritholtz, and he had a hedge fund manager on at one point in the past, and it annoys me. I can't quote to you who the fund manager is, but it was one of the famous ones, and it was some years ago. I was listening to that podcast, and that fund manager said, the fundamentals tell me what I want to buy, and the technicals tell me the when and the how to buy it. And it just blew my mind, because it was this simple statement of like a sentence or two, and it just summed up the way that I feel and my approach to trading in markets so perfectly. Like, sure, it's one thing that I've got this thesis that I think Alibaba is a great company, and, you know, the Chinese middle class and all that stuff. But if this thing is just bleeding lower and breaking down, am I wanting to come in and be a buyer? Absolutely not. I need a technical signal in order to do it. And we know what's happened here, especially over the course of the last couple of months, is a lot of institutional players liquidated. Perhaps they were forced liquidations, or perhaps they were, you know, liquidating for moral reasons or something like that. I don't know. But we know that a lot of big funds out there were liquidating positions in these big Chinese tech companies over the course of the last 2 months. Kathy Wood, as an example, came out like a month ago and said that she's going to be liquidating all of her Chinese stock holdings. I'm pretty sure that's a quote of hers, which is why it's so interesting that one of the main reasons why Alibaba and JD is up so much today is because she came in and bought like 100,000 shares of JD.com or something like that. I won't say anything else about that. But the technical signal came in yesterday. So this is a capitulatory bottom. So first of all, 2 trading sessions ago on Friday is when my team and I really started to look at this on the long side. And there was 2 main technical things here that we were looking at that made us think that it was either the right time on Friday to start buying, or that we were really close to it. And one was the massive pickup in volume. You know, forget yesterday for a second, which obviously had even bigger volume. But 2 trading sessions ago here, the volume was one of the biggest days that it had ever had. And then obviously it broke it again yesterday. And also the degree of extension. Again, the way that I measure extension in the marketplace is the space where the stock is trading versus Phoenix. I'm sorry, I just saw your comment in there. I'm not sure what I said that you want me to repeat again. Was it about what the fund manager said? If you put the comment in, I'll try to repeat it for you. But the 2 things we were looking at here from a technical perspective on Friday was 1, the volume, and 2, the degree of extension. So if you just look at it, let's just say 160 or so is kind of the midpoint here in Alibaba on Friday. You know, stock trading at 160, and the ADMA at that point is, you know, 177, something like that. So the thing was extended to the downside by $17. And really we should be looking at that in terms of percentages, and probably not so much in terms of absolute dollars, but on a percentage basis. I view any extension of like 10% or more on a daily chart away from the ADMA as kind of dramatic extension. And that's what we had on Friday, plus the increase in volume. So it really brought it onto the radar as, you know, something that we should be looking for. Phoenix Trader here is asking me to repeat what I said about the fund manager quote, so I'm happy to do it. The fund manager that I listened to, what he said was, the fundamentals tell me what I want to buy. The technicals tell me the when and the how to do it. So again, just to repeat what I'm talking about, sure, I've got this qualitative thesis that makes me want to be long Alibaba and want to be long JD.com, which is, you know, the increasing Chinese, you know, consumer-orientated middle class that's steadily growing and buying more goods. Alibaba's got more users than the U.S. has population. That's the thesis that makes me want to buy it. But I can't just be buying it here on the way down and just kind of getting destroyed when there's been no real technical signal for it. And now I'm explaining why and how that technical signal finally came in. So we started looking at it on Friday. The thing about it on Friday, we go to a 5-minute chart. This is Friday. So first of all, Friday, good news came out. This is Friday's 5-minute chart right here. Good news came out that positively impacted the Chinese companies. And the good news was related to a discussion between Chinese officials and U.S. officials about Chinese accounting practices for Chinese listed stocks. So for people who don't know, one of the big issues or complaints, if you will, about Chinese companies that are listed here in the United States is that they are not subject to the same accounting regulations that U.S. companies are. And you can make the argument that that is what potentially led to like the Luckin Coffee fraud situation that destroyed that stock. And on Friday morning, you got this big gap up here in Alibaba. On Friday morning, it was announced pre-market. We got this into the ProDesk virtual trading floor that I'm managing. It was announced pre-market that representatives of China and representatives of the United States were having a dialogue about making adjustments to the Chinese accounting practices to make it more in line with what U.S. companies have to do here in order to be listed on the New York Stock Exchange or the NASDAQ. The reason why this is so important is because a conversation existing between Chinese officials and the United States officials, what does it mean? Well, one of the big fears right now that has led to this sell-off here is that the Chinese government is going to try to pull these companies and not let them be listed in the United States anymore. Or that the U.S. government might come in and say, you know what, we're not even going to allow Chinese companies to be listed in the United States anymore. That's been one of the biggest fears, and that's helped lead to the sell-off. There's been a lot of chatter about, you know, DD having to be, you know, take their listing off because they really upset the Chinese government with when and how they listed, that whole kind of situation, which, you know, we've spoken about in the past. So the fact that they're having the conversation, what does it mean? It means that both parties are incentivized to make this work. That in and of itself, in my opinion, is huge news. And that also added to me starting to look at this on Friday of last week. So honestly, partially luckily, I didn't go to Baba for a long Friday morning. I went to JD. I went to JD Friday morning. I bought this JD very heavily versus 62.44, which was the pre-market low when that news that I'm referencing came out. And I don't have the pre-market chart loaded up here, so you're just gonna take my word for it. 62.44 was the pre-market low. So I went long, really heavy JD off the open, off that low, gave me this great little initial bounce. I was able to make some money in it. And then because of the weakness in Alibaba, which I'll talk about in a second, this JD rolled over, but it never even broke the opening low. So it turned into a decently profitable trade for me. Baba, I didn't go to off the open, which honestly was a little bit lucky. I just thought that JD, based on a pricing perspective, was actually a little bit of a better risk reward to the long side versus Baba versus that news low. That's the only reason why I went to JD over Baba on Friday morning. So I was able to make some money in JD, and luckily here, at least initially, I was out of the way on what turned into this massive damage of selling, and further, that created further downside extension on the daily chart. I was able to mainly stay away from it, and I started trading this thing pretty actively around 160 or a bit under 160 to the long side. And I took several trades here to the long side. Those trades were either break-even trades or they were losing trades until finally my trade into the close made me decent money, where by the end of the day on Friday, I finished kind of break-even on Alibaba, maybe kind of down small, and I made decent money in JD, so net, it kind of turned into a win. The price action here in Alibaba, just to talk about this on the downside, was massive institutional selling. We were able to see it in the tape, and it coincided with selling on the ADMA on the 5-minute chart. It was an algorithm, it was an execution algorithm that, in my opinion, I can't know this as a fact, was executing to the sell side on behalf of a massive institution. I can only guess it was some sort of pension fund or something like that that decided that there's too much risk in being involved in Chinese names. They told, you know, whoever they bank with to liquidate the position. That bank just turned on an algorithm that basically sold at the ADMA all the way down. Every time this thing tried to tick above the ADMA on the 5-minute chart, forget about even a 15-minute chart, this thing was just immediately whacked down. I was trying to buy downside extension for pops in a few spots. Again, I had some losing trades, had some break-even trades. Finally, my last one here was able to pay me pretty well, and I was able to, you know, finish the day down very small in it. I kept a very small position on it, and then I was really upset yesterday to see Alibaba gap up, because I was like, oh man, the stock's gapping up, I'm missing my opportunity. You know, the volume really came in on Friday, but they didn't close it that well. I didn't feel like I had a profit cushion, so for me, I don't keep positions. I don't keep positions with size, at least for the most part, if I don't have a profit cushion on it to cushion against a potential gap down. I didn't have enough of that in BABA on Friday. I exited the position. It gapped up on Monday. I was like, dang it, I missed the trade. And then they immediately wrecked this thing again. And it broke Friday's low. Now, and it did it on even more volume than Friday. Let's go back to the daily chart here. Look at this volume. Look at the relative volume that was done on Friday. And again, that degree of extension. Massive relative volume. By the way, capitulatory bottoms typically occur when volume maximizes. Now, the thing about volume maximization is you can never know. You know, it seems like on Friday the volume is so big that that's got to be volume maximization, right? Look at it, it's bigger than any of these other days. And then guess what? Monday it goes even bigger. So it's just I don't want to use the word indicator. It's what we call a layer of probability. Volume is a layer of probability. So in this case, I'm looking for the Alibaba capitulatory signal. The volume is a layer of probability that I'm going to see it or that I'm close to it. But again, we closed pretty weak on Friday. I couldn't catch a bid, and the stock was weak. Then we gap up on Monday. But we break Friday's low, and we did it. Look at this opening volume here on yesterday. It was even bigger than the volume on Friday, which is what eventually leads to yesterday's candle at even more volume. This trade was my team's focus yesterday. It was not the easiest trade in the world. I got heaviest off of a bid that I had at 153.81. That was my heaviest bid. I did kind of trade it back and forth a little bit. I did buy a little bit lower prices, also a little bit higher prices. And I had a game plan built out for myself to be able to build in a position and get actually increasingly heavy all the way into 150 and have a stop loss that would have even been a couple dollars below that. 148, 147.50, something in that area. And then this thing gave this huge bounce, resulting in a hammer capitulation candle on maximizing volume on this time frame. And by the way, just to mention it, when Alibaba was breaking lows yesterday is when all these people on CNBC, I got this CNBC on over here behind me. I don't watch CNBC. When I wasn't in the office because of COVID and the office being entirely shut down here, I didn't have CNBC on for a year and a half. I didn't miss it for a moment. I didn't miss it for a minute because I'm here trying to trade this capitulatory bottom in Alibaba on these smaller time frames, really trading stock back and forth. And I've got Jim Cramer on TV behind me saying, it's your last chance to be able to sell Alibaba. And some other person gets on CNBC and talks about how it's getting delisted and going to zero. I mean, these guys couldn't have been more wrong. And then off that, so this candle, by the way, this high volume capitulatory hammer means that you have a probability in excess of 50% of getting a move back to at least the ADMA on that time frame chart. I didn't expect that we would open up at it this morning. That was a nice little gift for me and for a lot of the people on my team who kept this as a swing long from yesterday's entry. So that was nice, but that's what that means. And I had a short-term profit target to 175, a short-term swing profit target. As a matter of fact, I had an offer out because of that profit target that was 15 cents above the high of the day today, so unfortunately it did not get filled. But that was my shorter time frame profit target. Number one was really 175. High of the day today is 174.15, and then I do think a move to this 180 to 185. Also, again, shorter term, not necessarily one day, it is definitely in the cards. And then from that point, it becomes a little bit trickier because you got the oversold bounce in, and now it actually needs to create a reversal pattern. And predicting reversals is much more difficult than just predicting retracements higher. Now, I do have the added conviction behind me of that fundamental type thesis that we spoke about earlier. So I do think it's very reasonable that we could see a reversal here, but I don't want to come in and actually predict a reversal. What I was really looking for is this massive oversold situation here in Alibaba to be corrected. And we've already seen that based on today's price action alone. And I think we could potentially see a little further price correction. I also don't think you want to come in and buy today. I think that you want to be coming in and buying on yesterday when my team and I were getting involved in this. I think if you're coming in and you're buying today, it doesn't mean it can't work. I do have some conviction in this as a company, but it does mean that from a trading perspective, you'd be coming in and you'd buying with a significantly worse risk reward and probability of success. So that's Alibaba there. I'm really bullish on the Chinese companies, but I want to make note that I am always bullish on what I call the Chinese majors. I don't like the Chinese minors. I think that when you're dealing with these Chinese companies, you really want to be involved in the ones that the that the Chinese government has a stake in or has an incentive to see them succeed, which tends to be those majors. We're talking Alibaba, JD.com, Baidu. I put Neo in that category. I'm a big fan of this Neo. Not so much the smaller players. Like I've always hated those Chinese education companies. I think that these things are still garbage. It's EDU, TAL. The government's forcing them to become non-for-profits. I don't think that those Chinese miners, even like a Bilibili, something like that, I'm not nearly as big of a fan of. So that's it. That's kind of a review of markets and what my team has been focused on recently. And what I'm trying to do here every Tuesday is kind of give a little bit of a lesson as well. Just seeing here. No, Zach's not here anymore. Golf guy asking if I can look at KWeb. Yes, I can. So KWeb is the internet ETF. I actually don't know the specifics of the holdings here. Let me see. Let's pull it up together as a team. Let's see what the holdings are. So obviously it's a China internet ETF. Let's see what the holdings are here. So number one holding is Tencent. I like that. 10%. Alibaba is 10%. JD.com is 7%. I don't really know what this Meituan is. It's not listed here. Pinduoduo. I'm not as big of a fan of that company. NetEase is solid. Baidu is solid. Bilibili, not as big of a fan. Trip.com, I'm not as big of a fan. But primarily, this is focused on what I'm referring to as the majors. So I like that. I like the holdings of this KWeb. Let's take a look here at the technicals. Technicals here are very similar. What I don't like about this KWeb from a trading perspective is that it's very gappy. I can tell you that right away just looking at the daily charts. So you're taking a lot more overnight risk in this just from a gap perspective than you are, I think, on even just kind of like a typical Alibaba type of thing. You can see Alibaba's definitely been gappy, especially recently as well. But what this means is that you got some of these stocks like Tencent, which is not listed here in the United States. I know that there is an OTC version of it, a pink sheet version of it, but that's not, to be listed, you have to be on New York Stock Exchange or NASDAQ or Amex. But that probably helps contribute to some of these gaps because it's primarily trading, Tencent trades in Hong Kong. But KWeb, again, it's similar, right? It's an ETF here that we just figured out. We just reviewed it as a group. It's composed of the Chinese majors, so it's the exact same situation. You could be trading this in line with trading in Alibaba. It's gapped up to an area here where you probably want to be booking profit. if you're long from these last couple of trading sessions, similar to what I just described with Baba. For me, I don't think I'm ever going to go to this as a trading vehicle. I'm going to go to JD, I'm going to go to Baba, I'm going to go to Neo. But happy to take a review of that with you there, Golf Guy. Will this be recorded? Yeah, so this is live on YouTube, and then it comes back onto YouTube, so you guys can watch that after. All right, so that's kind of charts here. That's where markets are. Let's talk a little bit about how you can potentially be involved with T3 and some of the really cool stuff that we're doing. Sorry, I got filled on a bunch of orders here for the things I'm actively trading, so I'm just trying to get in the other side of my orders really quick. I got filled on the bid. My game plan calls for me to have an offer. All right, cool. So let's talk about prop trading, let's talk about T3. So there's a number of ways that you can be involved with my team. So I run the Pro Desk virtual trading floor through T3 Live. The Pro Desk VTF is really cool because it is where most of the professional traders at T3 are located. And for a long time, it's really kind of been exclusively for professional traders at T3 Trading Group to have access to somewhere, especially now that we shut down the offices for a period of time with the COVID situation, to have somewhere where we can all come together and communicate as if we were on the trading floor that I'm sitting on right now, which is here in our Manhattan office. More recently, we've started to actually open that up to people who can become a paying subscriber to it. I would say that I only want to be working with people in my virtual trading floor that either myself or one of my other top guys that I work with has a personal relationship with. So if someone were to become a subscriber of the Pro Desk virtual trading floor, you should expect to hear from myself directly or one of the top guys on my team within the next probably 48 hours after you sign up, on just learning a little bit more about you and kind of giving you some expectations on what you can expect, because it's really important to me that my virtual trading floor that I'm running keeps a very professional aspect to it. We got a lot of great information in there, and we have a really strong team, and there's nothing, I won't do anything to jeopardize it, especially not for like a couple $100 T3 Live subscription. What I prefer is for people to actually become professional traders at T3 Trading Group, where you can get access to my virtual trading floor, my training program, and a whole host of other stuff for free. So that's what I'm going to talk about. So T3 Trading Group is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We've got now 4 physical offices. We shut some down because of COVID, including our New York City headquarter office, which is where I am right now. We are not open at this time to traders. I'm a trader, but I also do other things here, so that's how I'm able to be on the trading floor. Right now, all of our full-time traders, people who are only trading, are trading remotely, different places across the country, with access to that virtual trading floor, the Pro Desk that I was telling you about. T3 Trading Group is an SEC registered broker-dealer and member of FINRA/SIPC. This means that not only do you have to pass a background check, an FBI background check to become registered with us and be a professional trader, you also have to become licensed. You have to pass the SIE, Security Industry Essentials, and you have to pass a Series 57 examination in order to work with us. Once the exams are passed, then we can trade. We actually have 4 different software options available now. We added a 4th one on. So we've got Lightspeed, Strong Trader Pro, Wolverine, which is also known as WEX, and we've got Tachyon is the new one that we brought on. I'm just seeing a question here into the chat. Are we open to Canadian residents? Unfortunately, you cannot open a professional trading account at T3 unless you reside in the United States. There are a couple other solutions for you. I can recommend you over to a brokerage where you could have a margin account, and if you go through our recommendation, you could still get access to my virtual trading for free, or again, you could just become a subscriber of it to still be part of the team. But unfortunately, you cannot have a professional account with T3 unless you're actually residing in the United States and have some sort of work authorization. We do have other asset classes in addition to equities. Equities is my focus. We've got equity options, we've got futures, we've got options on futures. I would say as far as options go, if I was a retail trader, I probably would trade options because the natural leverage is inherent in the product. As a professional trader at T3, we give you so much capital access that I think it negates the benefit of being a directional options trader. my thought process has always been, why do I want to trade options which are a less liquid product and subject to time decay for leverage on directional trading ideas when the company here has already given me as much capital access as I could ever want? I was going to say it in a second here, but we typically start by providing traders with access to capital or buying power at 20 times what they fund their account with for equity day trading, and 8 times what they fund their account with for equity overnight positions, and then you're compensated through a profit split. For new traders, you should be aware that we pride ourselves on our training and development. Training and development is something that we take really seriously here. I do a daily morning meeting every day at 9 a.m. for the team. We do a daily afternoon meeting every day at 10 after 4. My afternoon meetings recently, by the way, have been broadcast on the YouTube recently. I'm experimenting with that. So if you guys want to tune in at about 10 after 4, Monday through Thursday, I'm broadcasting those afternoon meetings. I've been doing that for about a week or so, and you can get a better idea. We do a lot of our educational stuff in the afternoon meeting, whereas we do a lot of our ideas and game planning in the morning meeting. And then every afternoon meeting ends with a team Q&A. So it's an opportunity for anyone who's on the team to ask any trading related questions about basically anything. And you also get access to a 1-month training program. If you're an experienced trader, T3 is also an awesome place to be because we have an excellent balance sheet. So it enables us to be able to work with people at a size level that most other companies just can't do. So if you want to come in and you want to put $2 million into an account with us because you want access to $40 million, it's probably not a problem. Again, here's my email address in here, so just feel free to reach out, and you get access to all this free stuff. My virtual trading floor room, my training program, Scott Ruther's virtual trading floor room, Scott Ruther's Red Letter All Access. You get all of it for free if you get started with us now. And the reason we're doing this, very simply, is because if you're a trader with T3, we're incentivized to see you succeed. So we'd rather give away all this stuff for free, not make money on any of it, because you're a happy, successful trader and you become the next trader who's here for a decade. Everyone's going to be happier and everyone's going to be making more money than if we're just trying to charge you money off the top on this education stuff. So again, here's my email address. I tend to be a pretty busy guy, but I'm also a pretty friendly guy. So feel free to reach out to me about anything. If you want to get involved with the team through any of the ways that we discussed today, through T3 Live or T3 Trading Group, you can reach out to me. I can speak to you myself, or I can direct you over to the right people. If you want to chat about markets, if you want to chat about skiing, you want to chat about the spinning sidekick that I threw last weekend in sparring, again, reach out. Here's my email address. And with that said, I've got positions on that are moving. I got filled on a bunch of bids and offers while we were having our chat, so I got to get back to managing them. Everybody have a great day. Good luck trading out there. Keep in mind, risk management is the key to success in the business. See everybody next time.